Clock on the 26th as we're wrapping up a busy week of trading, but a great week of trading. Let's go ahead and get started. Jump into the charts. First things first, before we do that, there's risk in trading. Please always use trade capital only. You know the deal there. And I wanted to take a look at a couple things. So from the macro picture, a couple of symbols I think would be interesting for some possible, safe gains and some safe investing this year. Anything with yield, HNDL and MYD. These are mimicking some popular ones like HYG, the high yield corporate bonds, and JNK, high yield bonds. Also, the scary thing is this is like junk bonds. But off these crazy lows from 2022, we had this big rip at the end of the year, which prevented the bond market from going into that 3-year drawdown. I wouldn't be surprised if we see a potential breakout. I mean, this does look like it has a double bottom written on it. So this low, this high, if we're able to break and go higher, we're talking another probably 5 to 10% to the upside, in addition to the yield that these things offer. JNK offering 6.41%. Measure the move up here. Let's actually do that right now. So let's say we have equal lows to equal highs of around 8%. Let's box that in and double it up. So I'll box that in there, stretch that calculated move right here, copy paste. So that's a projected move from current price. Current price to that level is another 7.25%. In addition to, the yield for the year. There's your potential, double-digit gain, 13%. Is that going to outperform the benchmark this year? We'll find out. But all these look the same. So JNK, HYG, same type of formation, right? Kind of a double bottom. If we break the center high, this could also be looked at as one big bull flag. So we have a rally here, a little bit of a pause. If that flag continues to push higher, then I still think this measures pretty nicely to the upside. Obviously, if this breaks back down, then look at the lows and revisit the same thing with the range. If you time this, I mean, one thing that's tricky is a lot of investors that flock to these instruments don't necessarily look at price appreciation more so than they look at the actual dividend yield, right? So HYG is 5.72, JNK 6.41. A couple that I've been in for the last several years, 5.95 on MYD, and HNDL is nearly 7%, 6.79, but they all look the same. So just want to talk about that from a bigger picture. Bond market, we haven't looked at this too much, but the 2-year yield is going down, and the government bonds, the 2-year yield's down. So we're expecting to see if the 2-year bond prices will go up. The 10-year has gone down from that peak at 5%. It's going to be interesting to see if this continues to head lower or we have another, push to the upside. Fed rate decision next week on the calendar. Watch tool, expecting not much to happen with the pause. Interesting podcast I listened to last night. The U.S. is probably in a position where they should be the central bank to start cutting rates, or maybe they don't need to, but other central banks should, but they're not. So it's kind of a follow the Fed scenario where everyone's waiting to see, if and when the Fed cuts, then they'll start cutting rates too. But other central banks like the ECB and the BOC, so Bank of Canada, European Central Bank, probably in a situation where they should be cutting rates sooner than the U.S. But they probably won't. They'll probably wait and see if the Fed does come in, with something. So March has been kind of changed quite a bit. Where, and again, this is still going to change in the next week. but now the higher probability is that there is no rate cut coming in March. Although the market's anticipating, it was anticipating 6 cuts this year. Now it's anticipating 3 cuts this year. It's been back and forth quite a bit. The language from next week, Wednesday, with the Fed. I will be live on Wednesday for FOMC. I'll probably be joining Nick Sayek and team with A1 Trading and doing a little collaborative session. But where we start to see our first rate cut in the watch tool is in May, and then steady cuts from there. 1, 2, 3, 4, 5. There'd be 6 cuts for the rest of the year. So they can still cut 25 basis points, cut another 25 basis points, and another, and another, and another, and finish the year below 4%. So we're still looking at 6 cuts per this tool starting May to December. That language and that trajectory all starts from this rate decision next week, Wednesday. Pretty simple. So we'll see what the Fed says. I think PCE data came out this morning. PCE came in as expected, 0.2%. Personal spending up once again and printed higher than previous. So we'll see what this all means. I mean, month over month, PCE is your personal consumption expenditures. It's a play on, PCE is arguably more important than CPI. So let me jump into the chat while we're at it. Say good morning to everybody. Gary, good morning. Top of the food chain this morning, dude. What's up, man? Gary's in the house. David in the house. Ruth Ann's here. Chris, Mike. Are your bots for sale or for rent? I don't rent the bots. They're for sale. They're in my Discord channel. I've got them in an education thread. I've got all sorts of links to my education in my Discord channel. Keith, good morning. Willa, good morning. Nice to see everybody. Happy Friday. Willie, good morning. Larry, what's happening, sir? Brad, good morning. All right. So yeah, talking about a little bond action this morning, looking at the DXY coming into next week. We talked about this in the flex trading room. Indecision on the dollar, and we will probably figure this out next week or the week after. So this is the daily chart, 1, 2, 3, 4, 5, 6, 7, 8, 9. That's nearly 2 weeks of indecision going into FOMC. Not a surprise off of the holiday bottom. More upside to come or more fade. The good thing is, if you watch the dollar, we'll get a good sense of where the markets want to go. Okay, so we have seen the SPY try to push a little bit higher. It was all kind of led by last week's trading. So this was Wednesday, Thursday, Friday last week, and then this week has just been a little bit more of a drift, closing at all-time highs, several days in a row. Not much push, however. I mean, this week's weekly candle has been pretty quiet, and again, makes sense heading into FOMC. The candle from 482 to current price at 486 or 487. Actually, let's go low to high. It's pre-market still. Low at 482.78, high at 488. So we're talking about a $6 weekly candle. That's pretty quiet. That's about just under half of the weekly trading range. I mean, today, look, today's a brand new trading day, and if we're going to push and hit the average around $10.5 for the week, then we should see roughly a $3 to $4 move to the upside and stretch this candle even higher. The Qs also had a very quiet week, low at 420 and high at 429. That's not super quiet with that high and low, but that's a $9 candle with the average of 12.5. So we're still a little bit quiet on the volatility side as far as movement and direction for the week. Going into FOMC, obviously the market's going to do something. A lot of my expirations for the indexes, and we'll talk about this more next week on Monday, but I'm looking for trades where I'm already positioned for the SPY, the Qs on to the 9th. I'm positioned on the DIA for the 9th. I'm probably going to look at something on the IWM as well and put in some fresh trades with some, more kind of appropriate deltas in my option trading for those indexes. So interesting that we're down about $1.60 on the Qs right now. Still quiet for the week. We could push another $3 to hit the average. Whether that's the downside or upside, I don't know. I don't really care. I just want to see if the price is going to go somewhere. Okay. Gerard, sure. Just give me a second. Silver, I can check on that. Jean, yep, no problem. And good morning, Donna. Good morning. Yeah, let me grab the link for Discord. And I'm working on a couple of things in the background. Let me ask a question. Um, if you're in my Discord channel, the server is Chris Pulver Trading. Can you see a couple of the servers that I created this week or no? I don't think you can. I made them private. Um, but I am curious if you can't, just it's pretty obvious. Like one is Chris Pulver Trading. That's the big group chat. That one has when I go live on YouTube, it has a blog that I post every week on any Twitter stuff, analysis, education. That was if you're asking for the links. Let me see if I can find a link. So, uh, Mikey, if you're asking for bots, or whoever's asking for bots for sale for rent, yep. Let me post a link here. So education invite. So this is education link in Discord is right there. If anybody's interested in private instruction, you scroll to the top. There's a spot to get some hourly workshops or full day workshops. If you and some trader friends or a small group want to get together, I cap the group size at 10. But I do a lot of private workshops with groups for hour here, 4 hours here, a whole day workshop. A whole day workshop typically goes into the week just because I want to be able to trade and what I need to manage. But um, anyway, I'll post that link too. So this is for private instruction. And if you get into the private instruction thread, just scroll to the top and you'll see there's pay links there. There's a 1 hour private workshop for one-on-ones, full day workshop, and then there was some. I keep the thread open because I get messages there all the time. So anyway, that's that. And then free group chat. Got some new peeps coming in, but I'll post a link, Gerard, if you were missing it or it's not working. So here's free group chat. There's the group chat. So pop on in. Weather's fine, water's fine. Say hi. Lori's here, Gerard's here, Michael's here. Nice to see you. There we go. Okay. Well, we did DXY, and just going back to that really quickly, watch the dollar, and we'll get a gauge on where the stock market's going to go. Pretty simple. If the Fed comes out with a pretty dovish message, or the market's like, yeah, they're going to cut rates and they're going to do 6 rate cuts, and it's blah blah blah. If the market likes it at all-time highs, okay, cool. So where does the dollar go? Well, the dollar could break out to the downside and head back into this area. If we do that, I mean, look, we may go all the way back down to these lows again, but we also might have a bit of a correction, okay, where the dollar gets a little bit weaker and the stock market melts up a little bit higher, but it is starting to get into some pretty ridiculously overstretched conditions on the higher time frames. The daily chart, the weekly chart starting to show overbought conditions with divergence. So I could see the dollar, allowing that rally and melt up to happen a little bit further. But it would make sense to me that after this holiday low, that if the dollar pulls back into this structure, that it's poised to rally again. And that could be where we have that turning point on the stock market. Okay. So just want to keep that in mind, but watching the dollar closely next week to see where everything's going. If we push down to the low part of this yellow box or push in any lower, that's a good sign for the stock market. If the dollar post FOMC is here, that's probably where the correction starts to take hold and get some traction on the indexes. Right? So we've just been melting higher. If I go to these are the charts I'm talking about. So daily chart overbought with divergence. Okay, we're back up to overbought conditions. Go to the weekly chart. We are not quite overbought, which is surprising. This is a SPY, not quite overbought yet, but getting pretty darn close. The Qs weekly chart, also very close, but not quite overbought on the weekly. On the daily, definitely overbought. More divergence on the daily. Okay, so we had overbought with divergence. You can see on the momentum oscillator at the top, there's divergence there. The RSI, we've got some hidden bearish divergence on the top, plus we're overbought once again. Doesn't guarantee anything. It just means that I'm anticipating a bit of a correction. This is a good time to be looking for some type of pause or pullback. We've got lots of pivots. This rally has been relentless since pretty much late October into November. I mean, that's a 25% rally on the Nasdaq, pretty much unchecked. And a good price pattern that I'm seeing right here could be 1, 2, 3, 4, 5. That could be a 3 drive pattern. If this structure breaks, 1, 2, 3 correction, come back to these 2023 highs at a minimum. But again, I'm not calling the top. I'm just looking to see where does volatility kick in if we have a correction. What's the language? What's the catalyst? Why does it happen? And hopefully we can take advantage of it. So this week was a pretty good week. I posted this yesterday in my Discord group, just some trades and winners. Alcoa, Amazon, Costco, Intel, Netflix, Tesla, United Airlines took a small loss on Apple, but pretty good week overall in stocks and options. Currency wise, have some positions running. Didn't really close out a lot of trades. The robots did pretty well for me this week. I think each robot was up over a couple hundred pips. Perfect Storm Pro is up 276 for the week. Perfect Storm Original is up 563 for the week. Oh, you go, Perfect Storm. Nice. And Pockets Pattern Pro is up 126. So that's not a bad little robot win. 126 on Pockets Pattern Pro. And the original Perfect Storm did pretty darn well at 563 for the week. And the Perfect Storm Pro is up 276. 965 for the week. Thank you, robots. Let's see here. Thanks, Don. Appreciate that. There you go. Thumper killing the NQ. You made it. How's your do you have are you in a prop trading account with that and that you're doing the NQ trading on? I think you are, right? You making some good progress still just day to day? Every time I see you in here, you're talking about some profits, so that's a good thing. Here we go. Let me post this really quickly. So Perfect Storm Pro was 276. So 563. This could change if I have another trade or two close out later today. 563 and 276 and 126 per the robots. Yep. All right, and that total was 9 something, 965. Oh, that's a big number. There we go, 965. Morning, Trish. Okay, so there's the SPY. Let's talk gold and silver. I don't forget about that. So we're good on the dollar index. We're good on the indexes. IWM, small cap. Took a trade down. So we had this correction. I took a little 187 by 185. I was able to get 62 cents of credit. I closed it out for about 48 cents of profit without having to sit in the trade. I think I did this out to the 2nd or the 9th. So I took the profit there for majority of the profit. Which is fine. I'm still pretty interested to see where we're going on the small caps. I think in the current environment, it's going to be, the broader market catch up. I know everyone's talking about this. And one thing that happens in trading is if you think it's that obvious, it's probably wrong, right? So everyone's talking about this big catch up trade in the small caps. I mean, I'm not going to force trades in here, especially if we see a sell off where I don't think the SPY goes down, the Qs go down, the DIA goes down, and the IWM goes up. It's very unlikely. So if we're not breaking above this, 195 to 200 high, I'll just say 200 high. If we're not breaking above $200 on the IWM, which is the ETF that follows the Russell, um, will just stay in this range. Now we might not go all the way back down to this 162 level, but we could certainly just be, choppy in here for a little bit longer. But if we break above 200, then now we're talking about a potential broad market recovery, which I'm totally fine with. And there's plenty of upside here. This is a 20+% area just to get back to a structural high. The other indexes have already made all-time highs. So one thing I'm watching, sure, I'll keep an eye on IWM because there's good upside potential, more so than others. But I'm also watching some other markets. This is the Hen saying at 15,952. We're nicely off these lows from a rally point up around almost 10% off these lows. One thing that I'm watching closely is if China starts to be a little bit more vocal, starting to lift animal spirits a little bit. How do we follow that? The couple of symbols. So HSI is one. FXI we're in some credit spreads on. We're just doing mostly option trades. Oops. Alibaba is also off those lows from 67 all the way up to 73. That's a decent little rally, up 12.5%, now about 10%. Pre-market still hanging in there at 73. Not quite at double bottoms, but still watching. And I'm just testing. So I'm in like 75 by 70s for option trades. Baidu, I took another stab with the 105 by 100s. I've got a few of those running. We're trading at 108.61 with a pre-market at 106.97. Still has room to drop to 80 bucks. Still has room to not quite form that low. And if we go into the HSI, for example, this trend line is nowhere near breaking. So we could still have a, squeeze to the upside and then a push back down. It takes longer to stabilize, but I do think that this support is really important. I just don't know if we're going to get just a crazy rally or if it's going to take time to kind of bottom out and round out before we break this trend line. And then, then China looks a lot better, right? One big miss last year was, China's supposed to be reopening and China's supposed to have all this pent up demand. Didn't happen last year. And surprisingly, the U.S. Really, led the world as far as having gains thanks to AI and all the hype in semiconductors. And still, that is carrying on right now, where it's like most of the markets that's doing well, most of the stocks that are doing well. It's not the broad market. It's the same Mag 7. It's semiconductors. It's tech. I looked at the sector tracker year to date, and I thought this was interesting. Check this out. If you go year to date, which obviously we're just starting, but what's leading? Technology and communication services. Same crap that led last year, right? Discretionary's down, materials down, real estate down, utilities down. Healthcare is hanging in there. Financials are up a little bit. Financials are off to a pretty good start, actually. Um, but what's beating the benchmark? Sector wise, communication services, technology. What are your holdings here? Well, Netflix had a great week, right? Netflix was up like 10, 12, 13%. One of the uh, biggest carriers in the entire sector, 5.06% index weight, and it had a good week. Verizon 4.52, Meta index weight 24.68, right? Google 10 and 12 respectively. So nearly 45 to 50% of this entire sector is Google and Meta, and then a bunch of single digits ones sprinkled in there. But Netflix had a big jump this week as well, right? Here's your big percent change, 15.43% on the week for Netflix. You go into technology, what's the tech space? Index weight, Microsoft and Apple. Microsoft just hit a $3 trillion market cap. Apple still at $3 trillion. Nvidia still one of the best performing stocks so far to kick off this year, up like 20 something percent already. Advanced Micro Devices, another semiconductors. TSM we saw do really well. Okay, so again, it feels a little bit like 2022. Not saying that's a good thing or bad thing. It's just observation. Okay, ZM. ZM. You talking Zoom? Long term, um, I'll weigh in on this. I'm not forgetting silver, by the way. I still want to do gold, silver, and Bitcoin. So just give me a moment. Zoom long term. I mean, I like the current area that it's in. Um, actually, if this has when are earnings? 27th of February. If I get through the Fed next week, I might actually look at some option trades where, if it's possible, I might do like an iron condor on this one, where I think that this range is going to be pretty solid unless there's some staggering news to break this thing open. But what's nice is look at this. Earnings wise, you've had some pretty good prints over the last year plus. The one thing I want to check on would be through this Simply Wall Street app to see what's the snowflake analysis saying. Because if Zoom is, unprofitable, not likely going to be profitable for X years, then at best it's going to range. We'll find out, but I'll check it out. So profit margins lower than last year. 5.2 is a lot different than 16.1. But it says earnings are forecast to grow 16.78. That's good, trading well below estimated value. I would say this. I like it as far as we have just come way off the highs, which should Zoom have ever been a $500 to $600 stock? Probably not. You know, but here we are at almost a 90% discount, and if there's any value tech, if you will, this might be one of them. So this is a good point. Thanks for bringing this up because I think we can look at this one a little bit more in detail next week in the trading room. But I would say this. I mean, if I'm looking at positioning, if we come back in and revisit these lows, I'm probably just going to throw in a couple of option trades. So look at some credit spreads, for example. But as we're trading right now, could I do something where I can, sell a call there, sell a put here, price stays in the middle for the next week or two? With FOMC, it could be a little squirrely with more volatility, but part of me thinks that I could at least do an iron condor and get these spread. Um, I don't know. It might not be worth a lot if I did, the 80 by 60. But if I did, see, that's $20. I mean, I doubt I'm going to collect $6 or $7 credit on that. There's no way. If I did a naked, or not a naked, but I did a short strangle, it's possible. But I think if I did an iron condor, I'm gonna have even less than that. Depends on the actual width of the spread. If I did like an 80 by 81 and a 60 by 59, I'm looking to collect 30 cents on dollar spreads. So I'm going to take a look at that actually to next demand. And then longer term, I mean, if I position here with ZM, where let's say it hits $60, if I do a 60 by 59 and I stagger out maybe 3 or 4 credit spreads, if we find a low, and it could be, we could just be going sideways for a while. We could be looking at structure like this where it's starting to break and this is a falling wedge of some sort and there's room to the upside. I mean, I like this gap getting filled. I mean, even if you drag one giant Fibonacci from high to low, I mean, it's obnoxious how much recovery this thing could have. You know, is it the stock? I don't know, but at the very least, even if we just had this high to low and we retraced back 23%, we're going from $60 to $180. Problem is this could be like a Microsoft a la 2009 to 2015, 16, where nothing happened, right? Or almost a decade where nothing happened. And all of a sudden it starts to rip. So if it just goes nowhere for a long time, you're going to be waiting for a while. So options versus ownership for a stock like this, just because if we can pinpoint a low and we get paid on that bottom, time works in my favor. But I don't want to tie up capital on something that's still somewhat expensive. I mean, I don't really want to tie up $6,700 on 100 shares, you know. Uh, but I think there's potential. Like we carve this out. Tech makes recovery, broad market makes recovery, value tech is where money's flowing. We'll find out. Let's see here. Every time Tesla drops prices in their vehicles, the other manufacturers drop their production little by little. Huh. Yeah, it's Tesla had a rough earnings print. But I wasn't really well. Two things. We played it, and traders that were in it with me, lots of potential right here. This was a trade that we expected a profit. Max profit would have been about $30, and yesterday I saw it trading up to 26 and change, about 26.50. So we took the trade for $15.30. When I first saw opening bell, we had a gap lower. It was trading around 23. Slowly through the day, just continued to push a little bit lower. I saw it as high as 26. So that's most of the profit that we were going to cap and max out anyway. Heck of a trade. Heck of a trade. $8, $9, $10 a credit. Walking away with that was pretty solid. So I ended up doing some credit spreads after the fact. So we had our earnings play, and then I did some credit spreads where I don't know how much lower Tesla's going to go. So I just put a couple feelers out there for $1.45, $1.47, $1.61 that I don't think we're coming too much lower than 170. So I could be wrong, and we could just slam to the downside. But structure wise, and I talked about this in the trading room. I mean, I still see Tesla as a potential bullish head and shoulders. This high, and this creates the neckline. Left shoulder, head to neckline. We're still in this corrective territory until Tesla gets its crap together, or at least investors think it's turning the corner. I don't know what that is. Doesn't really matter. But we've had two rough earnings goes, and we've been in a drawdown since the peak in December. So this is now down about 25 to 30% from that December high. But if it stabilizes and this structure holds, then we have room to go back up and fill the gap. We have room to rally back up here. Pretty easy trade for me on Tesla right now at this point is if we get above 250 to 275, I would be talking Tesla's going back to 400 plus. That's the head and shoulders, right? You measure this move here, you measure it to symmetry. I mean, you could get 3 to 5 waves coming up where Tesla makes all-time highs. This isn't immediate. This is going to take years. Well, time, I should say. But it's certainly not going to be overnight. But longer term, I think Tesla is still going to be one of the automakers slash tech companies to reckon with in the coming 6 to 12 months. Okay, whoever asked for gold and silver or silver, let's get to it. Who was that? Let me go back to the chat. Silver, Jean-Marc. Let's take a look at silver. Let's do gold and silver. Gold is at 2020. One spot I would be watching very closely on gold would be a couple of things here. Okay. If Fed cuts rates, more like when Fed cuts rates, gold could be, okay, gold could be one of the better trades of the year. Okay, from a percentage standpoint, it's not gangbusters, but that's still 15 to 20% of wide open space on gold. Could be a huge story. So if and when the Fed starts cutting rates and we start to weaken, we start possibly adding more to the money supply once again. Easy money, it goes back into the same thing as like we know the toolkit that the Fed has and the central banks have, and it's they tighten, they ease, they raise, they lower interest rates. That's kind of it. You know, gold has been like peppering these highs. There's a saying out there there's no such thing as a triple top. So if we have this high, this high, this high, part of me almost wonders like outside of that little fake spike, if this is a larger move where we have this swing, and if this is an ascending wedge, and I could be stretching this here, but if this is an ascending wedge where we keep hitting resistance, 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 guess what happens when we finally blow through that high? Exactly what I've drawn. 24,2,500 on gold. So if gold gets a run like that, believe me, it's going to be one of my bigger plays this year, and that would also lead me into silver, and eventually, and silver to me is obviously not hitting the highs again. If you wanted to take this and say that silver and gold look the exact same, then silver would be up here peppering these highs at $30, but silver's not. Instead, silver's down here in this choppy zone between $22 and $24, or I'd say $24 and $26. Okay, so from $23 to $26, silver is still very indecisive. However, we start to break to the upside, silver has a nice open space to 30 and a swing trade up into the mid 30s. Low to high, low to high. I'm looking, $34, $35 on silver. I still like accumulating down here at $18 to $19, but if we get a break above 26, I am long, and I'm not letting go of this thing until probably $34, $35. So another one that could have a pretty good opportunity for, if we get some directional confirmation, and maybe it's up here, but that's anywhere between, 25 and 30+% upside. So I can definitely trade some options and step on the lever a little bit and turn, what's a 30+% move into maybe, 4, 5, 6% profit for my portfolio. Obviously, I'm not positioning my portfolio all silver. I watched Dumb Money on Netflix, the movie that's about GameStop and Keith Gill, that roaring kitty guy, who's been like absent since 2021. But if you're interested in that stuff, I mean, crazy story. But you can also watch the documentary called Eat the Rich, which I thought was better. That was like a 3 or 4 parter on Netflix, and they did a great job breaking the whole thing down. The movie's a movie, but I think there's some interest. It's just crazy. It's just a crazy thing that happened. So anyway, that's silver. John Mark, you good on that? So if we break above 26, 26, 25, I like the upside on silver, and same thing with gold. We start breaking above that 2100 mark. Fed starts cutting, easy money coming back in, stimulus, recession, inflation hedge, whatever, a lot of things. But technically speaking, I think silver and gold both look pretty solid for some gains. I'm not going to say this year, but I'm going to say when the price is confirming, I think the runway is open for a lot of gains, which I like. Bitcoin trading at 41. Um, that's a nice little bounce at 30%. Still didn't pull. Hang on, let me check a couple of pivots here. How far did we pull back? Could just be pulling back to a pivot point. Based on this on Bitcoin, if I see, that structure there, let me use a straight line. So when we broke that level, I think that Bitcoin is probably pullback wise, 44,000 might cap the move, and then have one more push lower. So if we go high, low, lower high, lower low, again, that's just against the backdrop of that $17,000 low or $15,000 low, and it's just a big swing. So if we have a three-wave correction, awesome. Let's get a three-wave correction. Excuse me, into let's say mid 30s. We correct into 38, 36, 34. I'm good with that as a correction. Find this 200 EMA on the daily chart for some bouncing, but I'm just going to be patient. I think obviously it was a big run up prior to the ETF launch and what was approved. There's 11 of them right now, and naturally, everyone's like coming in to get their Bitcoin exposure in an ETF form, and they just get disappointed with a 20% drawdown. So classic buy the rumor, sell the news, which has a pretty good track record, by the way. I mean, it happens in all these markets. It happens in Forex quite a bit. Ahead of central bank news, it happens obviously in crypto now, but same thing in stocks. So, all right. Any other charts? Any other questions for moi this morning? I'm gonna set this alert in here. So if I do something like that, that's pretty close. So this is what I'm just drawing this to see if this contains. So we go, high to low, we drift a little bit lower, we snap back here for a correction towards 43, 44,000, and then have another push lower. Ideally, that's where I'm looking to buy more Bitcoin, is right at that yearly pivot. And it's all the way from this low to this high. Try to find some equilibrium, try to get a good spot. To me, the big level that hopefully doesn't break to the downside would be, I don't want to see the bears reclaim this $30,000 level. If the bears go through 30,000, that's a rough spot. So that's what I'm looking to see, that this area, this kind of big demand area is defended. If it's not, then Bitcoin certainly has some trouble ahead. Okay. All right. Any other charts? Any other requests? Currency wise, currency strength chart for this morning. I saw the Swiss was on top. More fun in the Swiss. The New Zealand, the dollar, the yen on the weak side. Everything else is baseline. So getting some pullbacks on the Swiss crosses once again. It's coin to sell right now. It's been a sell since they launched the ETF. It coincided with that news. This, I mean, not right now, right? I mean, treat Coinbase like Bitcoin. That's kind of the similarity. This is when Coinbase was a sell right there. That was right when the ETFs launched. So from 180 down to 126, that's when it was a sell. In fact, I actually feel like I totally missed that trade with those ETFs coming out. But I also didn't know. I mean, the ETFs launch. It's like, are we going from 48 to 55 or 60? Are we just going to continue to run? Nope. So I should have been short. I should have been short on Coinbase. That was a pretty simple trade. Uh, but now it's just a matter of, how does it stabilize? So here, does it stabilize and then start to pick back up? I mean, honestly, I'd watch Bitcoin prices, right? If Coinbase came back to $100, I'd be interested in buying it again. But I know that the threat is that with ETF offerings, that there's going to be less and less um, Coinbase stuff, which could be true. But I still think Coinbase is here to stay. It's essentially has the blessing and backing of BlackRock. So I look at it like, look, if Bitcoin's going to go higher naturally, I think Coinbase will follow suit. Okay. How far out would you put a protected put to URA? Larry's asking. I did that out to March for right now. So I'm doing like every 35 to 45 days on protected puts. So right now I think I have a $25 put out to March 15th. So and this is one thing where yes, it's going to cost me, 25 to 75 cents or maybe 25 cents to a dollar to protect my butt on URA. But to the upside, if I am right on this stock, we're going towards, maybe 50 to $60. So for me to lower, or I guess increase my cost basis by, a couple of dollars for a 25 to $30 upside, I'm okay, like taking that off the top. That's like my seatbelt, my protection. But if I'm right on the upside, then yeah, I'm gonna buy puts the whole way. Because if something crazy happens to the downside, I want a put that's gonna help me, right? If we have some ridiculous drop and all of a sudden my put is in profit, then that's why it's there. Otherwise, draw your trend line, buying dips and see how this thing continues to run. If you look at some other instruments, if I do, there's a Sprott and then there's physical uranium. This thing blew the top off to start the year, but it's pulling back. So a lot of these little rallies that have kind of blown off and taken off aggressively to kick off the year, they're pulling back, which I think is good. Okay, so it's not necessarily like this just unbridled rally, um, but I think a pullback is necessary. So 23 minimum percent, right? 38 to 50 to 618. This would be the window where I'd look for a chance to buy some more. So on this particular instrument or anything here that's like physical uranium, URA and URNM are a couple that we're playing in the trading room. I would look for these levels to buy a dip. So yeah, I mean, and again, you don't have to own the shares, but you could just trade options. But directionally, I think there's a lot of upside. Okay, AB Volvo. So what's the ticker? Can I trade this as an ADR? What's the ticker? Is it this one, SWB? This is the German stock exchange. Yeah, EV stocks they're garbage. Rivian, Fisker, Lucid, um, Workhorse, Ride, they're all they were great a few years ago when everyone was all excited about switching the entire car fleet to EVs, but as Tesla prices drop, they're trash. Here's Rivian. I mean, the problem with these are, look, I mean, Rivian's real. Meaning I see their vehicles all the time. I know that Rivian's whole identity was they're trying to get their Amazon fleet. But they don't make money. I think a lot of these EVs came out trying to beat the automakers, trying to get to market faster. And it turns out that once they run out of cash and they're borrowing at higher rates, they can't afford to be in business. I mean, Rivian makes cars and sells them for $80 to $110,000 and still loses like $25 to $30,000 a unit, which is insane. So with a 10-foot pole, I'm not touching these. Fisker's another one. Fisker's higher end. Lucid is higher end. I mean, Fisker's 80 freaking cents. And look, I feel lucky that we were participating in this crap in 2020 where we had all this volatility. I mean, I was in Fisker at $10 and had some gains, and in it again at $10 and had some gains. But since then, once we broke below that $10 mark, this thing is dead. You know, um, Rivian, Lucid, let's LCID. Same thing with Lucid, right? Just not good. So I would say the EV space, it could be great in time, but I would be surprised if these names are still around. If anything, I picture like a Rivian and even a Lucid and a Fisker, like Tesla's probably going to own them. Or, honestly, like Ford, GM, Honda, some of the major automakers. Look, it's what they do. That's their whole identity. It's what they do. So I just I get the notion of like having these companies come in to disrupt the auto industry. But if their technology is great, but there's another company that's in a better cash position, they'll probably just buy them because it's a matter of time when these companies struggle and fail and need a bailout or need that extra lifeline of cash. And guess who has it? Not them. The automakers that are like, this is what we do. So not interested in these at all. Not even close. Okay. VLVLY. Gotcha. There's the OT. Okay, so there's the ADR. Um, so is this like the Volvo company? Design, manufacture, market operates through. Hmm. I mean, it's been in an uptrend, which is kind of nice. I would just wait for. I mean, we're getting a pullback, which is good. I mean, this rally here from 20 to 26 has been nice, but we had a little pullback, so it's not unchecked, which is kind of reassuring. So technically, it looks like it's cooperating. We still have highs, previous highs right here. Looks like we're in a Fibonacci area where if there's a chance to get long, this might not be a bad spot. Might not be a bad spot. So I'd say it's well supported where, and again, this is what I like about trading stocks and options. If I wanted to get involved in the stock now and put some options around it, I try to lower my cost basis where if I own this stock in particular, where my break even is below $20, I think the upside is fantastic. But I would say this stock is probably willing to come back and maybe retest the $20 area, come back and retest the trend line and see if this channel just materializes. But what's nice is you don't have to be super precise where you can start it here, uh, get some option trades to lower the cost basis. And like I said, whittle that cost basis down to, 20 or less. And I think you increase that profit potential by quite a bit. Yep. So, all right. All right. Okay. It's been about 48 minutes. Definitely long form today, but that's okay. I'll splice up a little bit, throw it on Instagram and TikTok for some highlights. I appreciate everyone being here live. Before you go, would you hit the thumbs up button for me? When we have 50 people watching live or 100 people watching live, 3 or 400 people watching through the week, it helps a lot just to smash. Ugh, I hate that I said that. Smash the like button. Just hit the thumbs up button for me. If you haven't subscribed to the channel, subscribe to the channel. That's great. If you want to join the Discord, I posted the link. I'll post it one more time for anybody that came in late. Had some new followers join in, which is awesome. Let's go YouTube. Free chat doesn't expire. Copy this link. This is free group chat in Discord. And servers, Chris Pulver Trading. And like I said, I've got a couple things working in the background with some other servers that I'm building out in my Discord channel. So you'll hear about that soon enough. And yeah, happy Friday. It's been a good week. Happy to grab some nice profit. And Equi's on demand students to see you in 10 minutes. Let's wrap up the week. Happy Friday. Enjoy the weekend. And we'll see you on Monday. By the way, I totally forgot. I said this in the trading yesterday. I totally, I mean, I was busy and just didn't remember. So yeah, I guess I forgot. Wednesday for the midweek market minute at 12 noon Eastern time when I jumped live. I just forgot. So I was busy doing other stuff. I did post a video on Wednesday for the Tesla, the Tesla Netflix earnings preview and recap, but that doesn't count as the same as going live. So anyway, Mondays and Fridays, 9 a.m. Easy peasy. Next week, I will try to be live Monday, Wednesday, and Friday. Also, I'm going to be joining A1 Trading for FOMC on the 31st, probably like a 1:45 to 2 p.m. slot. and love good stuff. Okay, thanks everybody. Happy Friday, and I'll see you soon. Thanks, bye.